Hey Nilesh Bhai, good morning. Thank you for joining us.
Very good morning.
Gold and Nifty have given similar returns. I mean, why are we doing so much of analysis every day? So much of volatility. We look at macro, we look at rupee, we look at earnings, we look at P. Life is so simple. Just buy gold, forget it.
So, Nikunj bhai, we'll have to figure out when Indians decide to sell gold, who will buy. Today, gold prices are up because we are one of the largest buyer. Fortunately for India, central banks of the world have become like our housewives. They have realized that keeping money in dollar, yen, euro, renminbi securities is risky, as Russian central bankers have realized. Now they have joined the bandwagon and they are buying gold as much as Indian housewives are buying. So yes, undoubtedly gold looks on a better footing. It has delivered great return like equity, but we'll have to realize whether we'll be able to liquidate gold or not.
Okay. Now the point is, where do you go from here? I mean, we always talk about equity markets, but let's first understand where is the earnings and economy headed, and is it now time to be optimistic because the macro, the data points in terms of tax collections, oil, dollar index, the macro is getting better now.
So Nikunj, it is not about macro going down or earnings not growing. It's all about meeting expectation. At 22 times forward, earnings expectations were running in double digit. Actual earnings came at low single digit, mid single digit. In every quarter of this year, Nifty 50 earning per share is more than 250 rupees per share. Overall, we are on our way to achieve 1030 Nifty EPS. The growth is likely to be mid single digit over last year, and that was below expectation, which is why correction has set in. Now, expectations are low, and there are reasonably good chances with good monsoon and improving domestic macros. We should be able to get somewhere around 1150 EPS for Nifty 50 next year. It is the earnings growth ahead of expectation which will drive the market upwards.
So what should be our approach now? Stay with the market or sell the market on every uptick?
So Nikunj bhai, in the short term market is like voting machine. Money flow determines prices. In the long term market is like weighing machine. Fundamentals determine prices. As of today, FPIs are seller. They have been selling quite consistently, quite aggressively. Their side is well known. No one is going to give easy exit to them by taking market up. If they are selling, market will continue to fall. As their selling stops, market will bottom out. And as their buying starts, markets will start rising. Undoubtedly, over longer term, fundamentals will play. This is fair value market where large caps are below historical average. Mid and small cap are still around historical average. So you should maintain neutral weight to equity. Give preference to quality over momentum. Give preference to high floating stock market determined prices versus low floating stock kind of manipulated prices. And go for reasonable valuation over expensive valuation. Be overweight large cap as small and mid caps are still trading at premium to historical average. Most importantly, don't buy everything in correction at one go. Keep on adding on a calibrated basis as FPIs are likely to sell for the near term.
If you like this video, then like, share and subscribe to ET Now.